Morning, everybody. Welcome to July. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning. First
All
of the
good?
month. Yeah,
Yeah,
not
pinch
bad.
punch, all that.
Yeah.
Hopefully, it brings with it some decent weather after a couple of weeks of miserableness.
Yeah, someone said, Kevin said that it's raining on Saturday, so it'll be a bit wet for the football.
Mm,
But hopefully not in Rome.
no,
We're going to Rome and bringing it home, apparently.
like it.
Or
Uh,
going to Rome and just coming home with our tail
Yeah,
between our legs.
that could also happen. Okay, let's get stuck into some news then. Okay, so OPEC and its allies will hold a critical meeting today with the aim of striking a deal on the pace of output increases, having already given members an extra day for preliminary talks in the hopes of hammering out an agreement. So oil prices are steady ahead of the meeting, but certainly could be in for some volatility today. Certainly, as there is some more nervousness with regards to the Delta variant of COVID-19, which poses a risk to economies reopening in some regions. So we'll come into the charts shortly. Over to the UK, inflation in the UK, according to the Bank of England chief economist, could hit 4% at the end of the year, which is double the central bank's target. So that's obviously a big number. And Andy Haldane said delaying action now may require bigger steps later. So that is, pretty concerning. And obviously, that's a challenge that's being faced in the US as well, where Americans' pay hikes are not keeping pace with the surging prices of everyday goods. So we are in for some potential worries and concerns about how we deal with that going forward. And that is obviously going to continue to be a theme in the markets at the moment. In terms of sort of reopening of economies, the picture is starting to become a little bit clearer on the future of work as companies start to set out their plans for a hybrid future, as they're calling it. Banks are at the forefront of the debate. Citigroup and UBS both touting flexible working policies as a way to recruit and also retain top talent. So it looks like working from home is certainly here to stay in some capacity going forward. And also on the crypto side of things, some of the world's leading hedge funds are finding it worthwhile to get involved in the crypto markets. Obviously, we have seen quite a substantial correction in Bitcoin in recent weeks, and that's prompted the likes of Steve Coe's Point72 Asset Management and also George Soros's family office to start trading Bitcoin. So that's very interesting and could further legitimize cryptocurrencies, I suppose, in the in the future, which is quite interesting. I don't know if that's had any effect on the price. I haven't checked the charts this morning, but I'm sure Mr.
Jump this
O'Hare is
morning,
across
mate.
that. Is it?
Yeah, I'll dive
Yeah.
straight into it when you're ready.
Okay, so a bit of a downbeat session in the Asian markets overnight, and that was almost also the case in a lot of European markets yesterday. Quite a decent bounce back today, looking at things on a general front at the moment, certainly in Europe. But as Steve said, Bitcoin looks as though that's taken a bit of a tumble. So let's not delay any further. Let's get stuck into some charts. Steve, where do you want to start? We going straight to
Yeah,
Bitcoin?
definitely. So
Go.
this is a cool one. I've been short of this for a while now, around about up here, 40,000. I bought it back when it broke 35,000. Thinking about the double bottom break and the extended move higher. The measured move was up here somewhere. However, we have failed miserably. That's sort of like how you sounded like when you said considerably. Head and shoulders formation for me, guys. This is time for me to get short again. I really like this. And that's pretty spot on, pretty perfect. Volume wise, it sort of lines up as well. Pick up in the volume. We've broken the net line. So this potential measured move target was only there. Now we've got to look to the downside. For me, we possibly could have a retest of the neckline, which is around about 34,400, 34,500. That would be the ideal point to get in, and stop would be placed above 35,300. So a good, really good risk reward there. And let's see what the measured move target is. Here's the measure move target down to 31,470. So that's for me a pretty good one. It's looking to retest the 31,100 level.
Is the risk reward
And
very good from there, though? Would you say?
I would say
As
it
we put your
is.
stop,
Let's get the risk reward tool out.
you can't say up there because you didn't get in, did you?
No. But I'm saying selling it on a swing back.
Okay.
Yeah, selling it on a pullback.
Stop above
Stop
the right
here.
shoulder.
Yeah, 2.5 to 1.
That's all right then.
Yeah, that's all right. But you obviously you have to have this pullback to get in.
Yeah.
If you're to get in right now, which obviously I will do.
But put your stop above the neckline as an alternative.
Yeah, could do. Above the right shoulder would only give you 1.3, so that's not really ideal. Maybe put it above this last 4-hour bar high. That'll be above the neckline as well. That'll give you 2.2 to 1.
Well, you've got the measure moves a bit higher than that, but if you're targeting the swing low of recent times, then that's pretty good, I suppose. There is option for.
Yeah, I mean, yeah, it's sort of like when you start to get positive news coming out about banks buying cryptocurrencies or seeing them as an asset, then yeah, should really get a different rally, then a different reaction to that. But you haven't had it. Maybe the news isn't circulated far enough on the Reddit and the other sort of like news columns that will move the market nowadays. I was chuckling to myself when you mentioned 4% inflation rate. I think we all know inflation is a lot higher than that, but there are people that don't want us to know that, isn't there, Boris? So, and in the US, I think inflation is higher, Joe, isn't it? I think it's they're already talking about 5% potentially. And so what's the you have some savings, you sort of think, oh, I know what I'll do. I'll put it in this really fantastic high interest rate account of 0.5% and leave it there for a year, and inflation goes to 4% and you're losing 3.5% on your money. What do we put in? Exactly. Bricks and mortar, mate.
You could lose even more if you stuck it in these markets at the moment, potentially.
Well, yeah.
I know they're inflation hedged.
Yeah, I mean that it depends. If you get great technical analysts telling you what to do, then you've got half a chance. Only half. Well, 44%, 44 out of 100, 0.44 chance. So yeah, that's stop waffling. That's crypto. So we've talked about crypto. What we're going to talk about now, we're going to talk about commodities now, because we've had a bit of an interesting move in gold also. As you know, I'm short-term bearish on gold, and we've got really sort of, while it stays below $1,800, I feel like that. We've got non-farm payroll out tomorrow. We had a decent ADP out yesterday, and gold seemed to react. Was it a decent ADP, Joe, or have I just made that up?
Dollar climbed yesterday with the better than expected ADP figure helping lift an increasingly buoyant greenback, which we'll come on to shortly. Yeah.
So dollar rallied and gold actually rallied as well. A bit unusual. Yeah, but I'm looking for opportunities to really fade this move, thinking about the move lower. But it is concerning for me, dollar rallying and gold rallying. So I'm sort of thinking, why is gold rallying when the dollar's rallying? Because it seems to be just driven by dollar really at the moment, and a safe haven play, which is not necessary if the equity markets are roaring away. So could be a little bit of a head fake, this one. I could catch me out. I'm sort of, as I say, short-term bearish, long-term bullish. Levels to watch today. I think really on an intraday basis, it's there's good reason to buy the dip, targeting a move to 1790. And also, again, selling a rally to 1790 with a stop above 1800. That's the sort of like play in gold, I think. Oil doesn't seem to care about anything. It's continuing to motor. We've got OPEC meeting today, or OPEC Plus meeting today, and I think that there's a sort of like there's a willingness to open up a little bit, but prices continue to press higher. As we're talking about serious highs taking place right now. 74. We just traded 74. Just under 74 the figure just now. So no slowing this bad boy down. Again, looking to buy dips really between 72.75 and 72.80. I'll change my mind on that when we break 71.63. That will, for me, will be an opportunity then to maybe see some form of correction in this unrelenting move higher. If you think about it, this move started really around about $61. It's a $13 move. It's quite a decent percentage. I can actually tell you how much of a percentage that is. They are 20% over about 40 days. Not bad. So commodities done, indices, let's jump into there. Stevie boy, sharpen up a little bit. We've had a decent rally in the last hour or so. We've seen FTSE sort of which looked a little bit on the back foot and a little bit scary yesterday afternoon. Me being short of DAX for a while and then getting stopped out of that at where I entered, I think. And then I saw the sell-off yesterday, this sell-off, and I thought, oh no, I've been faked out of it. But it didn't manage to break the previous swing low, 15,450. So for me, that's the key level that we've got to break to sort of see a sell-off. But why am I even thinking about that? This isn't going down. Feels like it again. Look at this. What's this last sort of hour? I think this price action, although it's a 4-hour candle, most of the action's taking place since 8 o'clock. So that looks pretty positive. On the again, probably buying dips. I'll have a little look at what we're doing on the intraday trade in a sec. And again, opportunity, I think, to sell rallies with, you know, fade the move again, just in front of these two highs, 15,800. So play the range, maybe. I'm thinking that's what it feels like. But we've got non-farm payroll tomorrow, so only maybe for today. Dow Jones has pushed up, broken the highs, 34,528, and it looks like it's heading towards 34,850. Not really a lot of resistance between there and there. So looks like we've had a decent impulsive move, or in the sort of fifth leg of that impulsive move. Nasdaq, no stopping this baby. Again, we've talked about it. Just keeps going and going and going. Just formed a new all-time high this morning, 40,614 on this chart. And nice bullish candle. Again, buying dips is the only way to go in Nasdaq. S&Ps, new all-time highs. Trading now. You've joined us for all-time highs in S&Ps, 4,315. Can't say fairer than that. Buying dips only. Don't think about selling it until we get a reversal formation candle. Yeah, we can't rely on any sort of like tweets from Trump to sort of negate this bullish move, although they never would. So yeah, it's all gung-ho on the indices front. Aussie 200, not really doing a lot. China 50, obviously still under pressure. I think we were buying a break of this last night. We bought a break right at the high in China 50. Was it China 50? I think it was, and stopped out on that on the overnight sell-off. So didn't get that one right. Volume does seem to be moving lower, while prices are just ranging sideways. Hang Seng had a bit of a sell-off, looking a bit weak, and the Nikkei holding up a little bit better, but it's still got this big old downward trending resistance, which we should really redraw now. Let's redraw it. We draw it there. That's probably the better resistance line. So there is room to move higher. We are above the 4-hour Ichimoku cloud. So yeah, looking to sell only up here. If anything, sell short if it breaks the support level at 28,500. That's me, mate. You can take over.
Well done, Steve. Okay, so as we just said, dollar index was pushing higher on the back of a stronger ADP number yesterday. Registered 3 consecutive sessions of gains. Looks like we're on course for a fourth if things continue as they are today. We've obviously seen this pullback to retest this broken trend line around about 91.43, and that's done a good job. We've seen the buyers step in, and now we're moving higher. And interestingly, taking out this previous high here from earlier in the week, or last week, 21st of June at 92.40. We're above that at the moment. Whether or not we can hang on to that into the close today is obviously the important thing that we need to keep an eye out for now. But certainly looking quite strong and looking to target that next resistance level at 93.02. And why that's a resistance level? Well, there's actually an unfilled gap here on the daily chart from the 5th to the 6th of July. So that'll be my next target. And above that, we're looking at 93.43. Now, that's a really important level because if we start zooming out and looking at longer term charts, so instead of the daily, look at the weekly, what we are potentially forming here is a double bottom on dollar index. So we've seen a breakout of this large wedge. We saw a push higher to 93.43. So a pullback, didn't quite make a new low, but we've seen the buyers obviously come back in, and now we look set to challenge this resistance at 93.43. Now, if we take a measurement from that low to that swing high and project it higher, as you do in the case of double bottoms when they form, then we'd be looking at a measured move up to 97.66, which is also, if you take the high from here back in March last year down to this low that we posted in January, is actually a 61.8% fib level that comes in within 5 ticks of the same level. So that is a really nice level to think about targeting for me over the medium term, providing we get above this resistance at 93.43. So interesting on the dollar, and no signs of it slowing down at the moment. So obviously this is having an impact on the on a wider basis across other currencies. If we take a look at euro dollar, that's looking weak on the overall weekly time frame. If we look at it on the daily setup, we are coming very close to threatening this neckline of this potential head and shoulders top, which I've drawn on the daily chart. It looks like we're taking out the lows that we posted on the 21st of June. Obviously we want to see that below that on a closing basis. At the moment we're just holding above it, and that's at 118.47, but looks ominous. You know, we've sort of rallied up to this resistance, failed, seen some reversal looking candles, and then we've seen 3 consecutive days of losses and potentially a fourth if we see more losses today. And we can see that the volume has picked up on this selling as well quite a bit. So yeah, looking for a challenge of this neckline. If that breaks, which today comes in at 117.66, can't see it happening today ahead of non-farm payrolls. Maybe tomorrow, if there is a big spike in volatility, then we may threaten that. But really, the level I'm looking at is the level, the next level down, which comes in at 117.04, which is sort of the horizontal level of support from these lows here that we posted on the 31st of March. If that gets taken out, then we've got a really nice looking head and shoulders top pattern there, and we're projecting lower moves down to our measured move target, which comes in at 110.56. So all eyes on this for me, and tomorrow could be a really critical day in the setup of this for obviously the dollar index and what that does for these other markets linked to the dollar. So looking at cable, that's not looking particularly great either. Again, sort of 2 or 3 days of consecutive losses have been posted there. Key level to watch on the downside here is at 136.70. On an intraday basis, I suppose we'll be keeping an eye on the low that was posted on the 21st of June at 137.86. If that gets taken out, then it looks pretty much like a shoe-in for a test of this level here at 136.70. If that breaks, then we've formed a double top, and we'll be targeting moves down to 130.97 over the short to medium term. Again, not sure what's going to happen today ahead of non-farm payrolls. You might just get a bit of positioning ahead of that, and obviously all eyes will be on that number when it comes out tomorrow. If we look at Aussie, for me, this has already broken out of the head and shoulders pattern. It did it there on the 18th of June. We've seen a little bit of a pullback, but the sellers have stepped back in, and now we're threatening to break below the low that we posted on the 18th of June. And if that happens, then it is just a case of looking to sell rallies, and we'll be targeting a move down to here, which is 70.57, which is the measured move from this head down to the neckline projected lower, and that's what we can begin to target, which also sort of marries up with these kind of swing lows down here. New Zealand dollar, US dollar, that was my gun to the head trade yesterday. It wasn't as good on the head and shoulders front as what we were seeing from Aussie, but again, I'd like to see these lows taken out from the 18th of June, and if it does, then I think we're looking for lower prices, potentially down to 64.27 over the medium term. What else can we look at? So dollar CAD, a little bit of stalling yesterday, but on the front foot again today, looking for higher prices there, up to 126.47 following the break of this long-term downtrend channel. We've seen a breakout, we've seen a pullback, and now we can expect higher prices on that. Dollar Swiss looking really strong. Obviously, the Swiss franc isn't faring too well at the moment, so we can expect higher prices there. We've taken out this swing high from the 18th of June on a closing basis, so we can now look for higher prices there. And if we look at dollar yen, that's broken out above this resistance at 110.96 after stalling just below it for a few sessions. Nice impulsive move to the upside yesterday, and that's being backed up again today. So a couple of resistance levels to target there. We've got swing highs or previous highs from 24th of March last year and also the 20th of Feb last year. So some key levels to target there. And if we start taking those levels out, then there is a lot of fresh air to move into on the upside with this one. Then we'll be looking for highs up at these kind of levels as a next target, up at 114.28. So all looking good for anything linked to the dollar index. No sign of the dollar index slowing down, but as I said, maybe things will slow a bit today ahead of non-farm payrolls tomorrow, and then we could see a push in volatility. But having said that, we do have a reasonable amount of data out today. We've got US initial jobless claims at 1:30, and then at 3 p.m. we've got the US ISM manufacturing PMI, which is a leading indicator for the market. So we will see what that comes in at and whether or not it will have any impact on the US dollar. Okay, so going to the head trades from yesterday. I went short of New Zealand dollar, US dollar, 4 ticks offside at 9 o'clock. It was looking better than that at one stage, but didn't really do an awful lot. Probably the worst of the dollar markets I could have picked yesterday, but that's the way it goes. And Steve, you were stopped out on your gold trade as that started to put on a bit of strength. So what are we fancying today? Got anything lined up?
No, you know what? I've really struggled. I even sort of took the time while you were talking to sort of have a real browse through, and really struggling. Everything seems to be sort of either middle of the expected range for today. The only thing I was thinking about having a little punt on a dollar, fading the dollar, but don't really want to do that. The only thing I'll probably fade it with is cable. Shall I do that one?
Yeah, go on.
So we've got this looking at cable again for our chart. We've got. Do you know how to select? If you select one arrow, Joe, do I have to keep going back up here to select it again?
Yeah, there is a setting where you can just keep duplicating it, but it gets a bit annoying.
Yeah.
So,
okay. Yeah. So we found support around here in this little band. I wouldn't say little band, it's quite a decent support, coming in at around about 138. So for me, could easy fade here, have maybe a 25-point stop, looking for a move back up to 139. I think I'll do that. I'm going long of sterling dollar. Here's a stop, 137.75, and well, let's round it up. You know what I'm like a bit. 4-to-1 risk reward. Look at a target 139, just over 139. Getting long here, just around about 138, and a stop at 137.75 ish. That's my trade idea. Buying cable. Come on, England.
Yeah. Okay, I'm going to take a look at, well, just really quick flick through the charts, and saw this on the hourly. Just drawing the lines on there, potentially a bit of a range underway at the moment on the hourly chart. And if you look at how prices reacted at the upper end, we can see it's created, a bit of selling pressure. Over the last hour, we saw a big old red candle there. So I'm going to use that, suggesting that this is at the top of the range and that we're going to fall to the lower end of the range. So let's get on that now. So currently at 1.5808, going to target a move to the lower end of the range, and now it's just a question of where I put my stop in order to maximize the risk reward. Now obviously, when you're looking at ranges, ideally you want to be above the upper end of the range. So that's going to be 66 ticks, which means it's only a 2R return. But because of this candle here, I'm going to be a little bit more aggressive and stick it above that impulsive move to the downside there that we saw at 8 o'clock to 9 o'clock. So looking for 3.82 R on that one today. And if we just sort of do a bit more annotating on the chart, bit of a trend break there as well. So hoping that that is good enough as a stop loss. We'll
Excellent. See. Got a little like from Tina on Facebook.
Oh, our only fan.
Yeah, well, yeah. No one else liked it. Just saying.
Yeah.
Yeah, but she liked it, but she didn't watch it.
She didn't subscribe either.
Right, okay, I'll have a little word.
Unbelievable. Yeah. Get all your kids to do that as well. I'll do it with mine.
Yeah, I don't want them to see Dad talking rubbish in
talking ball. Cool. Right. So as mentioned, 1:30 US initial jobless claims, 3 o'clock US ISM manufacturing PMI. Keep an eye out for those numbers. They may be a bit flat ahead of the non-farm payrolls tomorrow, or they might give us a bit of an indication about what to expect. So not really too sure what to expect. But just trade safe if you are trading today.
Yeah. Good luck trading out there.
Yeah. And we'll be back tomorrow.
Cheers. Bye.
Bye-bye.